Good afternoon to our customers in the U.S. and good morning to those in Australia. I'm Vanessa Chambers, and I'm the Director of Service Delivery and Product Management here at Martus. Welcome to today's session. Glenn Strack is going to focus today on the part of the budgeting process that we call reforecasting. For many organizations, completing a budget is only the beginning. There's many factors that can affect the course of a business from one month to the next. And in today's economic climate, reforecasting can be absolutely vital so that you stay on top of external and internal changes. Today's webinar is a deep dive into all the ways that you can use Martus to prepare a reforecast. Whether you are experienced at reforecasting every quarter or even monthly, or a newbie to reforecasting just considering doing that in this year, you're going to learn lots of cool Martus features that help you to prepare an updated budget with revised projections based on actuals to date and your current expectations for the remainder of the year. You'll even learn about the Martus forecasting module, our tool for preparing high-level projections. Now, a couple of housekeeping issues. If you have questions as Glenn goes along, please add them with Zoom's Q&A. I'll be answering questions there. We'll follow up individually after the session if you have questions specific to your particular organization. We have enabled support for closed captions now. You can click the Show Captions link to turn those on for yourself if you wish. We do have a diverse group of Martus users registered for this webinar. As you know, we offer a few different subscription levels, and there are some differences in the features available at each level. Glenn's slides will note when what he's talking about is part of a specific subscription level like Advanced or Advanced Plus. Keep your eyes out for those notes, and please send me a question if you're not sure of the subscription level of your organization. And of course, we will be sending the video and PowerPoint for this session to all registrants tomorrow. There will be a brief survey after this session. We hope that you'll respond to that survey since your detailed feedback is very helpful to us. We appreciate you taking your time to attend this webinar, and we want this session and those upcoming to be as useful as possible to you. Now, I'll turn it over to Glenn.
Thank you, Vanessa, and hello to everyone. We will start by looking at the agenda. During times of rapid change, accurate and timely forecasts are important financial tools. Change occurs inside and outside of your organization. This often has an impact on your organizational finances. Through timely budgets, forecasts, and reforecast, you can avoid year-end financial surprises. Martus provides the tools you need to confidently plan for the future. Our goal for today is to explore forecast and reforecast options in Martus. Before we jump into functionality, we should take a moment and define budgets, forecasts, and reforecasts. We understand these terms have different meanings to different organizations. Most importantly, we want to show you the many related options in Martus, but we will start with definitions. Budgeting is a process that allows you to plan financial and quantitative terms. For organizations, whether they are for-profit or not-for-profit, they basically go through the same thought process. Where is our money coming from? How much are we going to be spending? And what is the difference? Here are some additional features that define a budget. Based on a single year, usually have an approved version, and you preserve that approved version that you start with at the beginning of the year. Now, Martus allows you to reduce the complexity of your organizational budget. The financial world is constantly in flux. It is pointless to develop a budget and then never check where you are against the budget. Failing to provide timely, accurate information leaves your organization at risk. Therefore, it is sound practice to reforecast your budget throughout the year. Reforecasting is a noun. It is also the process of adjusting future month's budget based on a variety of factors, including actual amounts year to date, the approved full year budget, along with internal and external influences. Some additional features are often adjusted and considered a variety of factors. Now, let's define forecasts. Forecasts are more generic in nature and often done at a higher level. Looking at the features, and number 2, and now later we will look at the Martus forecast module as an efficient method to rapidly create high-level forecasts. To start our journey, let us look at a couple of simple and straightforward reports that provide valuable insight at a specific point in time. The forecast report is a standard report that provides actual amounts through the last closed month and budget for future months. The grand total of actual and budget is compared to your dashboard default budget. The variance provides a perspective of how you're doing at any point in the fiscal year. Let's go to Martus and take a look at this. You start your year with an official approved budget. Yet, it is important to evaluate how you're doing as the fiscal year progresses. A quick way to evaluate your current financial position is to look at the forecast report under Dashboard Financials. And once that loads, we will go to the forecast report. This snapshot gives you a quick picture of how you are performing in relationship to your official approved budget. The combination of actual through the last closed month and budget amounts for future months is then compared to your original budget. This provides you with a point-in-time perspective of your performance. You see what your year-end results will be if you stick to your original budget for the remaining months of the year. Looking at the far right, a black variance is good and a red variance is bad. As a manager, I may also want to view this report by department, and we can easily do that by setting the rows to departments or to any other dimension. And with each view, you're able to see how that component is adhering to the original budget. Here we see a department perspective. Let's head back over to PowerPoint. Martus Report Builder provides another tool to meet your forecasting needs. Here you see a Report Builder Enhanced Forecast Report. It is a pre-built template that provides a starting point of a forecast report that you can customize to meet your specific requirements. Let's hop over to Martus to take a look. Now, I want to make the point that for each of the Martus demos today, we're taking a perspective as if today is July of 2022. So let's go and let us look at Dashboard, Report Builder. And we see a set of templates here. We're going to open up the Enhanced Forecast Report template. And you see it's clearly marked as a template. Looking to the right, so let me collapse and scroll to the right. We see the forecast is compared to the default dashboard budget and also to the default planner budget. A big distinction here is you can customize this report to meet your specific requirements. Now I'm going to save a version for myself, and that is as simple as taking the template and doing a save as. And I am going to call this Enhanced Forecast Webinar and click OK. Now, we have been asked to change the rows to meet our organizational requirements, to change the rows to display GL accounts within each account category. You see here the default is GL account. I'm going to set this to account mode. Notice this one row incorporates a lot of lines. I'm going to click on that, and we see we have the groupings. We're going to set the first grouping to account category. You see that that can be flat, expand, or roll up. And we're going to set the second grouping to GL accounts. And I'm going to do update and refresh. Now what we see is we see GL accounts within each account category. Next, we've been asked to show the account category at all levels because we have parent-child relationships in our account categories. So I'm simply going to take account category and click expand and then update and refresh. Scrolling down to the expenses, we see the expense parent of 5.5 general administrative is a parent of numerous other account categories. Currently, the last closed month is set to July, and we see that here with actuals through July, but we want to see how we perform through the end of June, which is midway through our fiscal year. In settings, the overall settings for the report, we're going to change the ending date to June of 2022. And then click update and refresh. We now see the actuals go through the first 6 months and budget for the remaining 6 months. Our office typically reviews this report by quarter and not by month. To accomplish this, we're going to click on the actuals by month while we're in the edit mode. And you see this column type is period group. The data source is current year actuals. And the period is year to date expanded by months, which we also expand when we have period group. Well, we're simply going to change that to year to date quarters and update and refresh. Now you see the actuals are by quarter. Moving over to the dashboard budget by month, we're going to edit that. Once again, it's period group. This time data source is current year dashboard, and the period is year date remaining. So year date remaining is anything after the last closed month, which we currently have set to June, and it's expanded by months. We're going to change that to quarters and update and refresh. This is a whole new report. Now, to get another perspective, we're going to change the rows to department. So we're going to remove the account. We're going to set it to department and click update and refresh. We also are going to add a column for notes. So I could add a column anywhere, but I'm going to add it right here where this separator is, even though we can't add columns right or left. And I'm going to scroll up and I'm going to click on notes. And I'm going to call this notes column manager review. And I'm going to set this to hidden so that when we're out of the edit mode, this column of notes will not show. And we're going to click update and refresh. Now, looking down, evaluating, we see that Q4 outreach expenses are high. So the manager is asked to put a note there that says, cut Q4 expenses by 5%. And update and refresh, and we have the note. Next, scrolling down, the manager noticed the shared department expenses and wants to have some more detail behind that. So we're simply going to click the row, add a new row below, scroll down to the new row, click on that, and we're going to set this row up so it is account type, because all we want is the expenses. And you see with account type, you can pick your expenses or pick your type of data, one or more, but all we need is expense. We're going to put a title on this that's shared department expenses. Shared department expenses. And we've already set the type. We're going to do the grouping to account category. And lastly, we've set up a reporting group that we're going to use to filter the data that only has shared department expenses in it. So I'm going to click shared department, and I'm going to update and refresh. Scrolling down, we now see that we've taken these shared department expenses and broke it out into a separate section by account category so we can get a better perspective of what's going on. Now, rarely, we don't want to show this once we're out of the edit mode. So I'm going to click on that, click hidden, update and refresh. I'm going to hit save, and I'm going to remove the edit mode. All right. Now we're going back to our PowerPoint. Now, let's look at how to build a reforecast budget directly in Martus, where you can adjust or reforecast future months. In Martus, you quickly create a reforecast budget in 2 easy steps. First, make a copy of your board-approved budget. Second, pull actual amounts into your copied budget. This reforecast is used to determine variances by comparing it to the board-approved budget on the side-by-side budget comparison report. Now, reforecasting can be defined as a noun, the report itself. It is also defined as a verb, the process of adjusting your reforecasted budget to reflect revised future month expectations. Let's go to the next slide to adjust your reforecast totals back to the board-approved budget by updating future months on worksheets. Looking at a specific account, you had an approved budget for the year. Now you have a reforecast based on actual amounts from earlier months and budget in future months. But there's a variance from your approved budget of $894.10. We need to adhere to our original budget. Adhere to our original budget year-end totals. Once again, we see the variance of almost $900. We ask ourselves, how do we quickly adjust the remaining months of the reforecast so the full year reforecast equals the original approved budget? The answer is flat to budget. It will adjust future months so that the full year is equal to the original approved budget. So when I say future months, I mean any months that are not frozen. As a recap, the flat to budget option gives you an alternative to update it manually. The flat to budget updates the reforecast amounts in unfrozen months so that the year-end total equals the corresponding budget lines displayed in the reference data section, thereby eliminating your variance. Let's head over to Martus and see this whole process in action. So we're going to head over to Planner and Planner Setup, the admin area. We're going to see our list of our current budgets in the current year of 2022. To start a reforecast process, we're going to make a copy of our board-approved budget, and we're going to call it Reforecast July. Which is our last closed month. And we're going to click copy and OK. Now, personally, I like going to the welcome screen. Anything that's queued will show up here. And when it's complete, it will show it. So now I'm going to go back and my budget will be there. The next step, once we see this budget, is to load actuals. So now we have our reforecast budget. It's an exact copy of the board approved budget, except for the name. I'm going to click on the reforecast. You see that we have load actuals. I'm going to click on that. And we have this option, limit to existing worksheets. Now, there may be actual amounts that are not part of the worksheet dimension combinations. If we're to unclick this, those actuals will create additional worksheets. That may be something we want, and may be something we don't want. But to see what is going to be added, we have a report. In other words, to see what's going to be added if we unclick this option. So we're going to go to Dashboard, Financials, and we're going to go to the Worksheet Budget Comparison Report, one of my favorite reports, because it shows you where you're hitting budgets versus where you're hitting actual dollars. So in this case, for every entity department combination, every worksheet, potentially, if there is a budget, it'll have a green checkbox. If there is actuals but no budget, you'll have a red X. So what we know from this is if we unclick this, then any red X's, those worksheets will be created. Now, in this case, I want to stick to our existing worksheet, so I'm going to click Load Actuals. And OK. And I'm going to go ahead and refresh my screen, even though I could go to the welcome page and see when it's done successfully. And I want you to notice here that when you pull in actuals, Martus assumes that you don't want anyone to update those actuals, so we freeze those months. So what's the difference between freeze and locked? Well, lock will lock specific worksheets for all months. Freeze will freeze specific months for all worksheets. So we're freezing the months where we brought actual dollars in. Now, let's look at a particular worksheet. But before we do that, we want to go ahead and make sure these worksheets are unlocked, because we're going to want to adjust future months. And in order for our non-admins to adjust future months, it needs to be set as the default budget. So we're going to set that as the planner default. And if we go to Planner Summary, let's take a look at our Reforecast July budget with actuals through July. Now, to compare it to the original approved budget, we would go to the side-by-side budget comparison report, and we will select the board approved budget and compare it to the reforecast through July and hit load. Our goal, and you see the variance here, board approved versus reforecast. Our goal is to adjust the future months of the reforecast budget to make the full year equal to the board approved budget. Now, there's more than one way that we can do this. Historically, it's more of a manual process, making the changes to the accounts that you want changed. But we now have additional options. So we're going to start by looking at the worksheet 100 and department outreach. I'm going to edit that worksheet. And the first thing I'm going to do when this worksheet comes up is I'm going to go ahead and post my globals because I want those to be part of this worksheet. Of course, they're only going to post for unfrozen months. I'm going to post, and you see that impacted 3 different worksheets, but it impacted this worksheet. And I'm going to say, okay. Now I'm going to change the reference area. Remember, we have the reference area at the top, the budget down below. And I want to see in the reference area, the 2022 dashboard budget, which is my original board approved budget, which I'm now showing in my reference area. But down below in the main budget is set in the reforecast budget, the default planner budget. Okay, so let's look at a single account, and we're going to pick the account 5203, consulting fees. I'm going to filter by that. Note the variance. Well, let's take a look at the variance of $1,800. So what this is saying is January through July actuals, when we pulled them in, were off from the board approved budget by $1,800. Therefore, we are now anticipating, if we stay on the original budget for August through December, we're anticipating spending $1,800 more than we had originally planned. Now, our goal is to reset expectations for future months to bring the full year budget back in line. So we're going to select this line. We're going to go to line actions, and we're going to use flat to budget. And you see it adjusted the line. What it did, it adjusted the future non-frozen months, resulting in a full year $0 variance. Now, let's do this for all budgeted lines. So we're going to remove the filter. And I'm going to go ahead and collapse the reference area. Scrolling down and to the right, we're going to select all the budgeted income and all the budgeted expense accounts. And then we're going to do line actions and flat to budget. I want you to notice that 20 lines were adjusted flat to budget, removing the variance for those 20 lines, but 3 lines were skipped. Let's take a look at those 3 lines and why those did not adjust. Starting up at the top, you see $250 here. We still have a variance, and that's because there was no budget in that line to adjust. Scrolling down, we see the same thing for another line. And then we see a large $34,000 variance. Well, it turns out that that variance, that was not just flat to budget because it's generated from a special purpose worksheet. And remember, worksheet lines that come from SPWs cannot be adjusted on the worksheet itself. You would have to go back into the SPW to make that adjustment. So for these 3 lines, you'll manually make the adjustment, or you'll be willing to explain that variance. Let's head back over to PowerPoint. Now, when reforecasting, it is important to evaluate changes in personnel costs also. Start by copying the personnel scenario. Next, add new positions and make adjustments for costs that did not exist at the start of the fiscal year, or maybe there's been some costs that have been removed. Now, before posting the revised scenario to your planner reforecast, there are a few things to be aware of. Here's a clickable link to a recent webinar on personnel. Included in this webinar was a detailed section on posting a scenario to your planner budget. It is a very good review. Now, we'll head over to Martus and look at personnel. Bringing up our left menu, we're going to go to personnel budgeting and scenarios. Our first step, we've already done reforecasting in our planner budget, and we have our reforecast budget. Now we're going to do the same concept with personnel, and we're going to start by making a copy of our base personnel scenario, our default scenario, and we are going to call it updated reforecast July. And before I continue, I'm going to turn this off so it doesn't pop up. And now you notice you have include monthly details as an option. In this case, we want to do that because we know that we had a mid-year adjustment in the base personnel scenario that we want to retain. So we're going to go ahead and click that and hit copy scenario. And once that's copied, there it is, successfully copied, and we're going to set it as current because we want to work on that one. Now, the change that we're incorporating is a new position that we know will start September 1st. So we're going to go to positions, and we're going to click add a new position. The title of the position that's starting in September is admin administrator. Now, we don't know the employee's name yet. So we have a holding employee called vacant position. This type is going to be clerical. It's a full-time equivalent of 1. And as I just mentioned, the starting date will be September 1st of 2022. And by setting that on the position, this Martus will not budget until that day going forward. Now, as you know, every position must be assigned a valid worksheet. So we're going to set entity to 100 and department to 100 also. And we're going to click save. Now, of course, anytime you save a position, you want to assign pay types to that position. And as you also know, a pay type becomes a pay item when it's attached to a position. So I'm going to say add the pay item. And we're going to start off with salary. And the anticipated salary is $2,500 per pay period, gross amount. And we're going to hit save and new. Now, what's nice about Martus is the rest of these pay items that we're adding all have default amounts, so we can add them quickly. And so we're going to choose bonus. We see the default amount. I'm just going to hit save and new to use the default amount. And then we have health insurance. So we're going to go to health insurance. And with Martus on the employee record, we have the level of coverage, whether it's themselves, their family, their children, their spouse. And then on the pay type, it has a table for each of those coverages with the associated dollar amount. So the systems went out to employees, saw the coverage, went to the pay type, looked at the chart, saw there's $1,200 for this employee, the cost to the organization, and we're going to hit save and new to take that default. Next, we're going to look at benefits. Now, this benefits for this organization is using a blended rate of 22%. We're going to hit save and new. And then we're going to choose. This client is in the US where they have Social Security and Medicare, 6.2% on the Social Security, save and new. And then Medicare of 1.45%. And we're just going to hit save because that's the last one. Now we want to review the cost. So we're going to click view detail, brings up the detail report, filtered by this employee position. And we're going to scroll to the right. And we'll see that the cost starts in September as we anticipated based on the start date on the position. And we see the bonus properly posts in December. Now, lastly, we want to go to the summary tab. And we're at the summary tab so we can post the updated personnel costs in this new scenario. We want to post that to the Reforecast Planner budget. Now, this organization does not have any allocations, so we move to the bottom of the page. As I mentioned, it is best practice to post to a scenario budget first and review the side-by-side budget report inside of Planner. Now, I also want to point out that this pop-up is an excellent pop-up giving you a lot of background information on what's going to occur when you post to a Planner budget. Now, in this case, I've already looked at the side-by-side report. I know everything looks good. And I'm going to select the budget. I want to post to the Reforecast budget. So from a Reforecast personnel to scenario to a Reforecast budget. And I'm going to click post to existing budget. And okay. And that quickly posts. Now this, what we just did, the action, updated the Planner Reforecast with the updated personnel scenario. Note, frozen months on the Planner Reforecast are not updated when posting from personnel to a Planner budget. All right, back to our PowerPoint. Sometimes we need to rapidly create a high-level projection of the future. The forecast module may be the solution you are looking for. The forecast module is designed to rapidly create projections. Some characteristics are high level. You select which subset of dimensions to use. Of course, you can also include chart of account or account categories. Quick, rapidly update your forecast. Ease of use, adjust numerous rows or columns at a time and leave relevant notes. And lastly, a clean output format with filters. There are three types of forecasts in the forecast module. Multi-year projection, scenarios, and what if analysis by month when you're looking at the current year. Let's see an example of how each is set up inside of Martus. So we are going to Planner, Forecasts. Our organization is growing, and we need a quick projection of the impact over the next 2 years. Most of the costs will be in the early years, so we will create a multi-year projection. So add and multi-year projection, and we're going to call this 2-year for your growth projection. Now, you can do up to 12 years, but we're doing 2 years, so we can look at the current year and then following 2 years. And we're going to do this by department and account category. And we are going to base this on the original board approved budget as the starting point. We hit preview. And we're going to collapse the menu. Note, we selected 2 years. We can make adjustments on the current year and the following 2 years. For the purpose of this forecast, we are not going to forecast cost of goods sold or statistical accounts. So we're going to delete those and click OK and hit save. Now, we fully anticipate the accounting department for the first time will be attending some conferences. It's not included in the current budget. So we're going to add the department, the combination of the accounting department, along with the account category of travel. And we're doing this for expenses, and we're going to go ahead and add that line. Now that we have that line added, let's go ahead and filter for accounting. So we can focus on that line in particular, and there it is, accounting travel. There's no cost because we just added it. But we've been told to project or to budget. So we say we selected the line, and it's a flat amount of $2,000 a year starting in the current year. And we're just going to put the note conferences and apply. And we're going to hit save. Now we're going to remove our filter. And we're going to increase all expenses in 2023. So we'll scroll down to the expenses and we see 2023. We're going to make the adjustment there. And we're expecting an increase of 8%. So we're just selected percentage 8%. And we are going to put 8% growth and apply. And okay, now notice with this type of forecast, multi-year, it is cumulative. So a change you make in 1 year impacts the future years. Now we're also going to we're anticipating in 2024 an increase of 5% due to growth. And apply. And note that we can see our comments as we hover over them. Okay, so resulting revenue growth will be relatively slow, but consistent. And we are anticipating for both the future years a growth of 3% per year. Remember, this is a cumulative impact. And I'm going to hit apply. And we'll go down to the base. You can see the impact. First of all, you see the variances for income and then expense and the net. And we're going to save this. Now, I want you to see the results. Scrolling to the bottom, there is a results option. I'm going to click on that. And this creates a nice, clean results page that you can export to Excel. And note that you can change the view from the detailed view of both the department count category, or we can summarize it by account category. And we can also summarize it by department or department gain loss summary. Let's do the department view, hit load. And let's export it. However it's pictured, the result is how it will export to Excel. And that will come up in short order. And there it is by department in Excel. Excellent for a presentation. Now going back to our forecasts, management is concerned about the level of inflation next year. Today, they ask for expense-only projections of next year's financials based on various levels of inflation. They want this projection by location and department. It will be used in Friday's management meeting, meaning we don't have much time. So creating scenarios in the forecast module is the ideal method to quickly accomplish this task. We're going to select Add New Forecast, a what if analysis, which is a scenario analysis, and we are going to call this inflation impact. For this scenario comparison, we're going to look at 3 scenarios, but you can have up to 12. And as requested, we're going to base this on location, which is entities, and department, and we're going to select the board approved budget as our starting point. And preview. Now we enter the following scenario names, which is 8% inflation, so these are all scenarios for next year. What are the possibilities that might occur? And we'll change that to 5 and change this to 3. And tab, we're going to go down to the bottom, go ahead and save that. And since this is an expense-only projection as per the request, we're going to delete the income lines. The cost of goods sold lines, and the stat lines. We'll just delete those lines, hit OK, leaving us with just the requested expense lines. We're going to hit save on that, and we're going to adjust expenses in accordance with the scenario headers. So we'll make that adjustment. We're going to say this is if it increases, inflation is 8%, our expenses will increase by 8%. And we're going to hit apply in that one. The second one is a 5% scenario. So we'll do 5%, quickly input a note at 5%, hit apply. And then lastly, the impact of 3% inflation next year. And we'll say 3% and leave the appropriate note and hit apply. You see our comments show up. These are not cumulative. They are completely independent scenarios. Scrolling down to the bottom, you can see the impact, the expense change for each scenario as compared to the current year budget, and we will hit save. Now, we're going to click results. And management has specific requests for their Friday meeting. They want to verify that they'll be able to present this by department, which is currently set, or by location, which is entities. And clearly you can do either, but they've also want the ability to just show departments within the emerge entity. So we're going to set this. Well, I had detail. I'm so sorry. There's entity view, and here's the department view. And now they fully anticipate needing to show just the departments in the emerge entity or location. So we're going to filter by emerge, having the department view, and hit load. So they have exactly what they need, and we're able to create that whole thing in just a couple minutes. Continuing in Martus, we have one more request. Lastly, we have been asked to quickly display a forecast using prior month actual amounts and future month's budget amounts. In essence, create a reforecast budget in this forecast module. So from there, the team has a couple of specific requests to adjust future months. So we will create a new what if analysis by month, add a forecast, what if analysis by month. This defaults to 12 months because it's looking at the current year. And we're going to call this current year reforecast. And we have been asked to do this by account category. And because we want to include actuals through the last close month of July, we're going to select the reforecast planner budget as our starting point. So we're going to go ahead and hit preview. Now, we don't want to touch the months that have actuals in them. We only want to impact future months. So we're going to go ahead and uncheck all the months that have actual dollars were pulled into this reforecast budget, which is through July. We're going to remove the cost of goods sold line. Actually, I'm going to hit save first. Now we're going to go ahead and remove that cost of goods sold line and the stat line and delete those lines. Come down and hit save. Now, because we unchecked those lines, those months went away. Notice on this what if analysis by month, any change we make to the right are shown in the adjusted budget. Now, due to layoffs in the area, we expect lower contributions and sales. Therefore, we're going to reduce August through December contributions by 5%. So I can just click that row. The earlier months aren't shown, so they will not be impacted, just selected. And this will be a reduction of 5%. And we're just going to say 5% reduction due to layoffs and apply. Now, we've also been asked to project sales reduction 6% for the same reason. So we're going to just select it on sales. We're going to do a 6% reduction. And hit apply. Now, scrolling down, you can see the adjusted budget as compared to our original budget. And I'm going to hit save, preserve our changes. And if we click these months that we had hidden, you will clearly see that the only months that have been adjusted are August through December that were displayed. And you see the bottom line impact. Lastly, we'll look at the results. Now, I want you to know that the forecast module is available at the Advanced Plus subscription level only. If you're interested, contact Martus support and we'll be happy to answer any questions you might have. Now, let's take one last trip back to our PowerPoint presentation. If you want to learn more about the topics discussed today, here are some clickable links that will be part of this webinar PowerPoint that we will be sending out. Let me personally thank you for attending this webinar. Now, Vanessa has some final thoughts.
First, I'd like to thank you for attending this session. We hope you've learned some fun and useful things about Martus. Our next webinar is going to focus on the admin toolbox, managing users and user permissions, understanding and updating the last closed month, some focus on the sync with your accounting system, and understanding how dimensions are updated in Martus on the basis of your accounting system, and much, much more of particular interest to admin users. The webinar after that is going to focus on security. For many, that may not be a thrilling topic, but it's very important to us here at Martus. You have trusted us with your confidential and sensitive data, and we want you to know what we do to keep that data safe. Thanks again for choosing Martus. We're proud to be part of your toolbox for working to fulfill the mission of your organization. Please feel free to reach out to us at any time with questions or for more information.